We now have a chance to look at a success story, a lean startup, a journey into the cloud. We're lucky enough today to have Securities with us, and to start off their presentation, I'd like to welcome their co-founder and CEO, Mikaal Abdulla, to the stage. Thank you.
And our business, our startup, has been through quite an amazing journey. And our product was actually born on Amazon Web Services. So, we've been with them since day one. And I want to talk today a little bit about our journey and how we've applied some of these lean startup principles to our company, and really take you through the idea all the way to our launch, which was actually last week. So let's go. So first of all, just a quick background on our business. Securities is a socially networked investing portal. So what we've done is built a social network for investors to share ideas, to ask and answer questions, and to, in essence, follow trades, so communities, those active buys and sells in real time. And you also have the ability from this same portal to trade. So by bringing these two things together, community and trading in one place, we hope to build a very disruptive business. Our business is born in Hong Kong, so we're very, very proud to be a Hong Kong startup. Launched in Hong Kong was really for a couple of reasons. One, the competitive set is incredibly traditional there, so not particularly evolved. We're dealing with a lot of competition who distribute through branches, phone broking, so advisory, that sort of thing. And on the same token, we are also have the benefit of being so close to China. So Hong Kong is arguably one of the most important capital markets in Asia, and will grow, I believe, because of that continued integration with China. So for us, it was a perfect place to start a business. So I want to talk a little bit about the problem we hope to solve. The conventional way, and this is particularly true of people in Asia, investors in Asia aren't as self-directed as their counterparts in Europe and the US in terms of making investing decisions. So not as self-directed. So what we did was say, how can we bring that conversation that is largely offline today online? So the behavior in Asia is many people trade online, that's true, but they're getting their information from the top, from institutions, they may get it from financial bulletin boards, they may get it from friends or family. But the problem with all of those things is that information is declarative. Right? So if you go to Yahoo Finance and go to a bulletin board and you're trying to research a stock, did someone really buy Apple at 11 and sell at 500? Or are they a genius, or are you talking to a 10-year-old? You don't know. So what we tried to do was essentially bring that all into one place so the conversation moves online, global community, and an ability to trade. So the market we're attacking is really huge. It's consumer financial services in Asia is a massive industry. If you look at just the investing segment of that, there are over 50 million online investors in Asia today. What's also interesting is that Asia, again, relative to Europe and the US, still has a relatively small proportion of investors that are online. So you have this huge offline opportunity too. So in addition to that, you're going to continue to see more people moving offline online. So let me talk a little bit about our story and our team in particular. So most of us came from a company called E-Trade. It was an online brokerage that one of the first online brokerages that launched in Silicon Valley in the late 80s. And most of us were sort of charged, our mandate was to grow E-Trade's business outside of the US. So at our peak, we were managing approximately 15 geographies outside the US. So that was Canada, Europe, the Middle East, and Asia. And so one of the things when we thought about bringing the team together, the most important thing to me personally was diversity of opinion and experience. So, diversity of opinion, we need people that can inject new ideas, and we have ambitions to grow a global business. So we're starting in Hong Kong, and it's something I'd like to see more Asian startups do. Let's take our business to Europe, let's take our business to the US, but you've got to have people that have that experience. So for us, bringing that experience in, bringing in that global experience was really important. The big mantra you always hear coming out of Silicon Valley from most startups is, we're going to change the world. That's a lot easier said than done, you know, and for this team, you know, by having operated in so many countries, we had the privilege of, you know, making a lot of mistakes and also really understanding the competition and the markets in those places. So we have a real sort of solid idea of after Hong Kong where we want to go next. And I think that, you know, one can't underestimate the importance of experience when you think about taking your business outside of your home country. I want to talk a little bit about the process as well. So basically our theory was we knew we wanted to raise money to launch this business. It was a necessity. We're in a highly regulated industry. It's quite a capital-intensive industry, and we're competing against really big banks and brokers that are very established, have been in Hong Kong a long time. So we knew we wanted to raise a lot of money in order to give ourselves enough runway to be successful. And I think, you know, to each their own. Many people's approach will be to raise in multiple rounds. Ours was we wanted to raise enough money to give us a runway for approximately 3 years and get us to cash flow positive. And if there was a good uptick on the product, then we wanted to have the ability to access capital and invest more of it to grow quicker. So that was a little bit of the rationale that went behind our decision. But, you know, our sort of theory was let's build a working prototype and really focus on the customer experience. So we wanted to focus on everything the customer touches. And our theory was the quality of that prototype and that experience in front of an investor would dictate the quality of our investors and ultimately how much money we were able to raise. The days of raising money on a PowerPoint are long gone, so at a minimum, you know, you should have a prototype. You should have something that an investor can touch and feel. And you'll find that for any investor. You know, they're just simply not going to invest in an idea. So we worked hard and we kind of bootstrapped our way to that point. So bootstrapped our way to prototype and really everything that the customer touched, we were able to then pass on to the investor and let them then use it. Also getting clients and customers on the platform early on that prototype, getting their feedback and modifying and adjusting as we go was really critical. So we were able to raise 8 million US. It was a tough slog. We started the process, and I think it took about 4 or 5 months, and just a few learnings. You're going to get 99 no's for every yes. You got to have thick skin. When an investor tells you that they want to see some traction before they invest, it took me a while, but I learned that's a polite way of saying no. So be prepared for that one. But keep at it. I have a lot of faith that if you've got a great product and you've got a great team, you're going to find investment. I think it's a relatively efficient process, and you will find an investment if your idea is good. So keep at it. It's also a great way to lose weight, by the way. So just if you need to lose weight, raise money. The next step was where we actually had quite a bit of luck. Is we were fortunate enough to be selected to present at TechCrunch Beijing's Battlefield. So we were a finalist there and presented to a big audience, and that sort of set off a chain of events. So, you know, we were able to, from TechCrunch, get a lot of coverage, positive coverage, a little bit more maybe than we even expected, and maybe a little bit more than we even wanted at that stage. That was in November. We knew we were going to be launching a few months later. But what it did is it set external expectations. So for the first time, people on the outside had expectations of what we were doing, what we were building, and I think that created a very healthy pressure for us. So we sort of embraced it, but obviously, you know, the practical benefit is from our perspective was in terms of the SEO and optimizing our business for search, and we're 100% online, 100% of our marketing is online. It was really beneficial to us. We launched last week, so it's very early days. So after this sort of build process, we launched, and you know, we definitely adopted an agile approach to development. You know, continuously deploying the product. A big part of our launch and the timing was really up to third parties. So we have to get a license from the regulator in Hong Kong. We've got to then connect our trading platform to stock exchanges around the world. We've got to integrate market data from around the world. So, you know, somewhat complex. When I think of the lean startup, it's really, you know, I think it's for us, and I think everyone can have their own interpretation. It was less about cost and more about speed. So for us, you know, by adopting some of these principles around product, and I think it's also something that we've kind of brought in the culture of our business as well, it allowed us to move fast. And I think the product is one element of your strategic advantage, but I think thinking lean and thinking fast is another. So we're competing against an enormously big, entrenched industry. So for us, speed is everything. Customer-centered design, usability. We wanted to create a seamless experience, and of course, social. I won't spend a lot of time on our business model, only that we run a low-cost operation. Low-cost advantage and scale, as I mentioned, is important. We have a global product, so multi-market, multi-currency, multilingual. Again, we built that from day one with the view that we want to grow this business globally. We measure everything. All of our marketing is online. Only 8% of our competitors' marketing is online, so it creates an enormous opportunity for us to get found. And then finally, just being focused. Again, that word focused. So quickly taking you through the customer journey. The first thing you'll do as a customer is you'll build a visual profile. So we'll ask you a few questions. What's your trading experience? What stocks do you trade? And what's your typical strategy? So you then pick an avatar, and that builds your visual profile for the product. And that allows us to then deliver you a dashboard that's built around your own preferences, and also allows us to introduce you to other investors that share your experience and preferences. We then deliver you with an app market. So we are a platform, and you can then pick the markets, news and research, social apps, all of those things that you want to pull into your own dashboard. And you have the ability to completely customize that experience for you. It's not static like the other solutions. And then you share ideas and trade. And again, what makes this unique is that all of the information is real and in real time. It's not declarative. All of the social interactions are tied to transactions, so you have real visibility in terms of what the community is trading. If you're interested in trading Apple and you've never done it before, you can quickly pull up who the top performers are for Apple, and then choose to follow them. You can interact with the entire community, or you can build a private trading circle. So it's really up to you. We give you that control. So the last thing is building a seamless experience. So obviously, mobile's mission critical, and we've built the product in HTML5, so we're not pursuing a sort of native app approach, but rather HTML5 across the board. And I want to quickly show you a quick video before I hand over to my colleague. And what this will do is it will show you. Sorry, go ahead. And so we're delivering everything you saw there in the portal through Amazon Web Services. And just imagine, it's a lot of transactions. You've got your trading transactions going to stock exchanges around the world. You've got market data, real-time news coming in. You've got all these social interactions and user-generated content. So all of that is being deployed through AWS. So I just want to introduce you to my colleague, Francis, who was one of the co-developers of the platform, to talk a bit more.
Thank you. Hi, everyone. It's good to be here. My journey to the cloud started 3 years ago when I co-founded a technology startup. Our vision at the time was to build unique and advanced trading solutions for retail investors. And our vision was to deliver this product in a software as a service model. So not only our product had to be appealing, but it had to scale and be cost effective to operate. Prior to that, my business partner and I had been running IT operation, development and infrastructure for major banks and brokers. And as you can imagine, in places like that, getting hardware was really an activity that could take weeks, if not months. But for a self-funded startup, as we were at the time, being lean was really a matter of survival. Because not only we had to build a viable product quickly, but we had to host and operate it as well because of the SaaS model that we had in the vision. So when we came across the cloud, it was like revelation for us because the offering was exactly what we were looking for. No upfront cost was required from us to get started. It was a non-committal model, so we could get started without being penalized. Having said that, we soon realized that to get full benefits of the scaling capabilities offered by the cloud, we had to inject two key considerations into our system design. First, we had to find a way to, first, our core services had to be designed in a way so that they can scale out. Secondly, we had to find a way to remove that usual bottleneck that is the database. For us, the answer to those two questions was to implement a MapReduce or a master worker pattern across the board on our processing layer. And for the data, we implemented two strategies. In-memory caching for all the temporary data, we had to distribute to the user interface. And NoSQL for any data we had to persist. And this includes all the user-generated content generated by our social apps. With this principle in place, our solution was able to scale in the cloud on all tiers, on the presentation, on the processing tier, and on the data. At Securities, we use all the principles I've been describing. Our current market focus is Hong Kong, but we have global ambitions, as Mikaal explained before. So knowing that our solution can scale and can actually be deployed in the various regions supported by AWS is an important success factor for our business. And this is what the solution looks like. So in AWS, we are running our web app and our API to serve the web portal that Mikaal presented before. We have a distributed in-memory caching for the temporary data, for the transient data. We run a NoSQL engine for the UGC data. And we have our scalable core services and adapters. We still use a data center for all the connectivity to the exchange, to the Hong Kong exchange and the US exchanges. We have our order engine running there and our back office tools. Through syndication, we get external feeds, news, and we connect to social networks, Twitter and Facebook, and we'll be tackling the Chinese social networks as well going forward. This is what it looks like from a physical deployment point of view, if I could say that. So in AWS, we run securities.com website. So here, it's a pretty straightforward deployment. It's pretty much out of the box. We have a set of web servers sitting behind an elastic load balancer. We have provisioned some storage for the NoSQL engine. So here, it's a micro instance on which we have attached an EBS volume. For our production environment, we are using a virtual private cloud because we wanted to isolate this particular environment from the rest of our infrastructure in the cloud. So in there we have the trading dashboard that you saw, and also our business intelligence tools. We do our software delivery straight from the cloud as well. So we have our developer sandboxes running in the cloud. We have our testing environment and our staging environment running there as well. And the beauty of the cloud here is that we can shut down those instances when they're not, when we don't use them. And finally, we even do our software configuration management in the cloud. So we do our builds, continuous integration, and incremental deployment straight from the cloud. And I mentioned the stuff we are running from the data center already. Here's a quick recap of the services we are using. So our solution is based on Windows instances. And we bind elastic IPs or static IPs to every instance in our infrastructure in the cloud. We use EBS for the storage required by the NoSQL engine that we run. We have VPC to isolate our production environment. We use elastic load balancing for public website and for the dashboard. And we use CloudWatch to monitor the entire system. But our journey to the cloud is not over yet. There are many more services we'd like to explore in due course. First, CloudFront. With CloudFront, we'll be able to deliver all our static content with low latency. And for us, with our global vision, it's good to know that our user experience will remain consistent regardless of our users in the globe. Secondly, we'll be looking at Elastic Cache as a replacement to the distributed in-memory caching system that we're using. And the major reason for that is that we want to leverage the monitoring and management provided out of the box by AWS. For the same reason, we'll be looking at DynamoDB as a replacement for the NoSQL engine that we run. Finally, AWS Direct Connect. When this feature becomes available to us, we'll be able to have a direct link between our data center and our VPC in the cloud. And that's going to really improve the way we do our market data feed, the way we serve our market data feed, and order execution to the portal. Now, how does the cloud and the way we use the cloud give us competitive advantage? We see two main competitive advantages. One, agile provisioning. Two, optimized provisioning. Agile provisioning means that we'll be able to react to unforeseen market and business conditions. It will give us the ability to have better agility when it comes to iterative product development. And we are really able to adapt our costs to our business output. Optimized provisioning means that our infrastructure costs are correlated to our business output in a very cash flow friendly manner. And because of the infrastructure that is available to us, we can reduce our risk of downtime and have our team focused on generating value rather than working on the plumbing. I want to touch on the cost saving that we have seen by using the cloud. And just to explain how we came up with these figures, we have compared the cost of running our infrastructure in the cloud to the equivalent of running it in an on-premise data center. So here we looked at all the environments, so development, UAT staging, production of course, but also all the network equipment that we would have required if we were running the solution on-premise. During the initial stage of the project, we made 82% of cost saving. The initial stage was about skinning the dashboard, working on the integration with our market data vendors and the exchange connectivity, and doing all the testing associated to that. So here we see a huge cost saving compared to an on-premise solution because we were able to shut down all the infrastructure when it wasn't required. So our testing environment didn't have to run 24/7. Yeah. At the end of the day, on the weekend, everything was shut down. During the friends and family stage, where we had real traders using the product, we made 70% of cost saving. Now that we are live, we have budgeted 60% of cost saving, but we are anticipating that the number will be much higher than that, especially under those unforeseen market conditions that I was talking about. there, the saving could be virtually unlimited. Now, let's have a quick word about the roadmap, the technology roadmap at Securities. We have an API and we have a platform, so we want to build a developer community and an ecosystem around our product. And we'll be launching a seed fund to initiate that developer community. We want to resell our products, services, and software through B2B partnership. And we'll be launching brokerage as a service offering. And of course, global expansion. Securities is born from Hong Kong, but we want to go beyond. Thank you.